Hi, welcome to the market alert for Thursday, the 23rd of October 2013. And starting off with the 5-minute chart, it's plain to see there that we had a sell signal yesterday. Everything was going fine, the order was filled, and then the market turned around and came back up and took the stop out. Now, it's very frustrating when this happens, and in particular when you've got a situation like we had yesterday where we've got this sort of resistance that goes all the way across. Let me just redo that and take out the extent right there. There we go. Especially when you've got this resistance at 16,650 and you see the market banging its head against it, and then eventually the market going down to what would have been a profitable trade. However, along the way you can see there that the market filled the entry price and came back, and again, had it not been stopped out of the trade, we can see the market there once again hitting the entry price, and then this becoming a support area. So I just drag that across there, and then eventually it took some professional selling to go through and for the market to continue lower. Just one of those very frustrating days. The first 2 to 3 hours the market's just sideways, and then eventually breaks and moves to the downsides, and it would have been a lot better had the market have put in another sell signal, but unfortunately it didn't, and that's just par for the course. That is the trading animal, unfortunately. And we just have the odd situation like this. It's not very often that we get a situation where we get it trading sideways for so long, and in particular in the first couple of hours of trading as well. It's generally sort of late afternoon when that happens, when the market goes quiet. But coming off this high volatility correction, which we see in the daily charts, it does take a moment or two for the market to sort itself out. We had a good day on Tuesday. Yesterday the market obviously pulling back, but it took a moment or two for the market to start reversing to the downside there, and the market finding a bit of support overnight. So it's a case of seeing what happens today as far as if the market's going to attempt to move back to the upside or continue with a down move that we already see in the background there. So far the market having moved back, and from the lows of last week we can see the buying coming into the market there, and just a matter of sorting itself out and settling down a bit more as well. You can say this Monday and Wednesday are unusual because we've not had that for the last 4 or 5 months, and that's purely and simply because we've had a situation where we've had this correction in the market over the last 2 weeks, which has caused a lot of volatility. Just have a quick look at today's economic news around 1:30. What have we got? Unemployment claims. These are the weekly ones from the US, high impact. They will be out and gone by the time the Dow opens, and then there's only the flash manufacturing PMI. This is out at 2:45. Medium impact news item for this one. Yeah, so getting back to volatility, for those of you that have been with me for many years will know that we use implied volatility to find out and give us a picture of what the underlying market's done. It's incredibly accurate, and I will post a video this morning on this, and the contents of the video we used to predict the recent correction that we have seen in the Dow, and that's because of these lows. And I'm not going to go into detail here because there is a video dedicated to what this chart actually means for those of you that are new to PPT. But just coming up to the top here, we've got the implied at 14.63. We've come off the highs of about 18.5 from a low of 9.5. So we've had a 100% increase in implied, and now we're seeing the market come back. We're seeing the froth come out of this market, so indicating a potential bottom in place for this market and a resumption to the upside. However, that said, it's there is a way of measuring whether the market's going to to move back to the upside as well. So at the moment we're sitting at 14.63, and from 9 to 19.5 is 28.5. That's the distance from the low to the high. Divided by 2 gives us around 1465, and we're at this level now. So another rule of implied volatility: if this doesn't break the 50%, i.e. 14.65, and continue lower, then we could see another move to the downside as well. And again, that's proved itself over the last 22 years as well. So at the moment we're seeing the implied volatility pull back, the froth coming out of the markets as forecast in the last couple of weeks in the market view, and of course all the way through September as well with this correction in the market. Right, well that's it for this morning. Like I say, there will be a full-length video for those of you who have not seen it before on the implied volatility and how valuable this tool is in forecasting what the Dow is likely to do. And again, you'll see when I actually recorded the video back in June, we've had 2 corrections since this indicator as forecast. So that's it for today. All things being equal, see you in tomorrow's market alert. Have a good day, and as ever, thank you for your support. It's very much appreciated. And as ever, thanks for watching. See you in the next one.